Hello there, it's David here from Dingle Lane, and today we have an accounting insight. Today we're going to be looking at what it takes to be a successful business. Now, it's pretty easy to oversimplify success or failure by reducing it to simple terms. Black and white, assets and liabilities, boom and bust, profit and loss. The reality at the end of the day is that it's far more complicated than that. In fact, it's so complicated that it is possible to be a profitable business without being a successful one. Confused? Well, it's all about cash flow. There's a common misconception amongst many businesses, and particularly many small to medium-sized businesses, that profit and cash flow are the same thing. They're not. For a business to thrive, it needs to be profitable, yes, but it also needs to generate a positive cash flow. And the two terms represent very different financial parameters. And in order to thrive, you need to have a solid system to keep track of both. The reality is, of course, many people new to business, and in fact many people who've been in business for a long time, only have a system in place to keep track of one of those things, and that's the profit. Why? Because they have to. Because the Inland Revenue wants to know their profits, either for their annual accounts and their corporation tax return, or their sole trader or partnership accounts and their income tax return. But it's the availability of cash that can truly make or break an organisation. It's cash flow, not profit, that determines an organisation's viability. In fact, one study found that 82% of businesses fail as a result of poor cash flow management. And that's why one of the absolutely critical things that I work alongside my clients with is on managing their cash flow forecasts, as well as looking at their monthly, quarterly, annual accounts and so on. By definition, profit is the surplus after all the expenses are deducted from revenue. It's the basis on which tax is collected. Thank you very much. Cash flow, on the other hand, is the amount of cash available within a business at any given time as a result of the inflow and outflow of money. And they can exist at various levels in varying degrees of balance, depending on the time of year and what's going on. So, for instance, you could have a very profitable contract with a customer, but end up being unable to pay your bills. Well, how does that happen? Quite simple. You could be selling your product, selling your service to your customer at a cost that exceeds all of the costs involved in delivering it. So you've covered all your manufacturing costs if you're a manufacturer, you've covered all your delivery costs, your vehicle costs, your fuel costs, your driver costs, etc. if you're a haulier, that kind of thing. But the devil's always in the detail. Many wholesale customers hold up their invoices for 120 days maybe before payment. Meaning you've made the sale, you've done the delivery, you've incurred all the costs of delivering that product or service to the customer, and then you've got to wait 3 months before you get that money back. And in the meantime, you've still got bills to pay, you've still got people to pay, you've still got things to keep going, equipment to keep going, vehicles to keep going, and yet you've got no money coming in. It's a profitable contract, but you've run out of cash. Not very helpful. But equally, just because your business can pay all of its bills doesn't mean it's profitable. Some people use debt as a way of managing their cash flow over a period of time. So they've got cash in the bank now, but over the course of time in the future, they've got to pay that back. They've got to pay the interest on that. That adds cost to the delivery of what they're doing. That adds cost to their business and so reduces the margins. Now, some businesses have high margins, thank you very much, that's not so much of a problem. But on businesses like haulage, where the margin is on average 2%, you whack on a business loan that brings in cash at 15, 30, 35%, you have wiped out profits for that job and several jobs later on. So managing that cash flow, managing your level of debt, managing your level of loans, the grants, all the rest, absolutely blooming critical. Cash is the lifeblood of your businesses, and it's the key indicator, I found, of financial health of any business. first thing I look at when I talk to a new business and start working with them. It's not their profit and loss. I look at their cash flow statements if they have one. And if they haven't got one, we start working on putting one together, because that's the key indicator of where they really, really are as a business. Cash is necessary for their daily operations. It's for their taxes. It's for their purchasing inventory, meeting payroll, satisfying their short-term financial obligations. Regardless of how great your service is, regardless of how great you are at what you do, you'll not survive if you cannot manage your business's cash. And small to medium-sized enterprises particularly are at the highest risk of being cash poor because, ironically, they constantly reinvest their profits into their operation, into their business, to make their business better. They are investing in their businesses far more than many of the larger businesses are. But that, ironically, is causing them cash flow problems. Larger, more established businesses frequently actually have a cash reserve as well. So what I try to work with people to make sure happens is that they don't let their entrepreneurial dream become a negative cash flow nightmare that isn't ideally positioned for growth, and particularly as market conditions change. At the moment, we're in a serious problem with cash flow. The market is absolutely down to rock bottom in many sectors. The Road Haulage Association, for instance, is suggesting that the best part of 50% of the UK's lorry fleet is parked up doing absolutely nothing because they're not shifting stuff. When the COVID lockdown lifts, there is going to be a massive pent-up demand of stuff that needs moving. And yet we're going to find that the economy won't be able to grow very fast because many of those operators will no longer be in business because they haven't managed their cash flow. And so one of the things that I'm trying hard to do is to work with people as soon as possible to manage their cash flow, look at the steps and put in place those survival plans so that they're in the position to take the greatest advantage of the renewed business when that comes into place. But good cash flow management doesn't happen by accident. It takes planning and often professional assistance. Hello! So, to ensure your company implements the right plan to manage your liquid assets responsibly, do consult with experienced strategic financial planners. Talk to your accountant. That's what they're good at. That's what we do if you use us properly. Conduct a step-by-step cash flow analysis and planning ahead for gaps between your accounts payable and your accounts receivable. Get it going. But there are obstacles. Even when you have a cash flow in place, when you start thinking about it, there are things that get in the way. And some of the key things I see from my clients, see it from businesses around me, but get in the way, can include, well, the key thing that actually stops cash flow planning working properly is the poor collection of receivables. Not going out and getting people to pay their poxy bills. Why? Because you're too nice. At the end of the day, business is business. You know, a customer that doesn't pay their bills is a lousy customer. It might be a big project. It might be a profitable project. But if they ain't paying their bills and they put you out of business, then quite frankly, you shouldn't be doing it. It's a lousy project. Don't be afraid to go and chase the money. If necessary, get other people to do it for you if you're not comfortable doing the chasing. The FSB has facilities for its members where you can subcontract that out. There are firms that work with the FSB to specifically do that chasing. There are systems you can set in place to automatically do it for you. I have a system in my accounting software that allows it to automatically chase up people who haven't paid me within the set amount of time that I give them, and I don't like giving people credit either because it affects my cash flow. I also make sure that the terms and conditions of the business are looked at first. I don't rely on other people imposing their terms and conditions on me. They want me to work with you. You use my terms and conditions. Thank you very much. I make use of the various facilities that are available to me. My clients do the same because at the end of the day, they've got to stay in business. The other thing that we need to worry about is making sure that their pricing is right, making sure that their margins are right in terms of their profitability, but also in terms of managing the cash flow over that gap between when they deliver the service and when they pay. That cash flow has to be bridged, and so therefore that has to be paid for. That's a cost to your business that has to be built into your pricing, so that at the end of the day the customer is paying for that free credit. It's not going to be free. It ain't free, it never will be free. They're paying for it somehow, somewhere. And I'd rather they weren't paying for it out of your business going bust. I'd rather they were paying for it in a sensible price for the service that you're giving to them. Alternatively, another common problem, your expenses are too high relative to your sales. You're not thinking about how you can cut costs. The great thing about a cash flow is it really brings to the forefront of your mind what exactly are you spending your money on. And particularly in SMEs, small to medium-sized businesses, one of the key problems that gets in the way sometimes is what we call impulse spending. It's a good idea. You've got to invest to succeed, yada, yada, yada. But at the end of the day, when cash is tight, you've got to very carefully think about where are the returns coming from and managing that. Or alternatively, of course, your sales are too low. So one of the things that we look for when we're working with our client is looking at where are your sales coming from, how are your expenses in relation to that, looking at making sure that you are not overestimating your future sales, a common mistake of many small businesses. They plan a cash flow based on expected sales that's effectively wish marketing. They're not doing it on the basis of a sensible bit of business planning. They're doing it on, I'm pretty sure, I'm confident, I hope, I wish that I'm going to get those sales. It's not a question of I'm actually going to get those sales. I've not built in safety margins and buffers. And they're not keeping a cushion of cash flow in hand. They're not thinking about where that cushion is being built up when the times are good and when the cash flow is coming in, and they're not watching as it go down. So those things become absolutely critical. And so one of the things that I absolutely urge you to do, if you're not doing it already, is get your cash flow working together. Get it put together. Go through it with a fine-tooth comb, line by line by line by line. What are those expenses that you can cut? What are those expenses you can reduce? What are those expenses that have got to remain the same? But conversely also, what expenses do you potentially have to increase? There are some things you are going to have to potentially do to go out and get more sales, to go out and actively market your business much more heavily than you have been perhaps in the past, where business maybe came to you. You've got to look very closely at the returns you're getting on the marketing that you're doing. You're looking at the returns that you're getting on how you're going about getting your clients, the lead generation that you're doing, and making sure that that feeds back into your cash flow so that you're building effective sales forecasts into the future, so that can help drive how you're running your expenses management process. Okay, well that's my starting thought for today. If you've got any questions, of course, please do give me a shout, and I look forward to speaking to you again soon. You take real good care of yourselves. This is David from Dingle Lane. Nanu nanu.